Okay, and very good day to everyone. In today's episode of Growing Your Tree of Prosperity, we're going to do a shallow dive into something a little bit different. We're going to talk about REIT, and let's see how viewers will respond to that. We are going to go look at AIMS APAC REIT, which is a REIT that I have owned for many, many years. In fact, I've owned AIMS APAC REIT for so long that the amount of dividends that I've retrieved from this counter is probably higher than the amount of capital that I paid for it. All right, so I've been holding on it for a very long time. So it is a Singapore listed industrial REIT, and it owns a diversified portfolio of logistics, business parks, and industrial properties. 3/4 of your rental payouts are denominated in Singapore dollars. About 1/4 is in Australian dollars. So it's primarily a Singapore REIT. Market capitalization over $1 billion, price to book value about 0.76. All right, so it's not too bad. The current gearing is a little bit low at 39%, and I'll explain a little bit why. Okay, and this is a debt to equity ratio of about 0.46. Right. So normally when we look at the gearing of a REIT, if it is below 40%, it's actually relatively low. But you need to be very careful because one of the issues you need to deal with when you look at AIMS APAC REIT is that it issues perpetual bonds. And when perpetual bonds are being issued, they don't look like debt holdings in their balance sheet. They're actually equity holdings. So because of this, gearing is not a very good measurement of the risk of the portfolio. So instead, we'll be looking at interest coverage. And interest coverage is about 2.4, which is higher than the 1.5 minimum. But later, as we go into shallow dives into more REITs, you will find that 2.4 is a little bit on the low side. All right. So I've held this for longer than a decade. Okay, so far it's been very safe, but I just want to make sure that everybody who understands AIMS APAC REIT needs to understand that their managers are very proficient in the issue of perpetual bonds. And so when you look at an analyst report, you must always orientate your view towards how much perpetual bonds that they have released so far. All right, because if you treat them as ordinary bonds, maybe the gearing ratio would have exceeded 50%. Okay. All right, so let's look at the yields. Yields are fairly attractive with AIMS APAC REIT being more than 1% higher than our Lion Philippe S REIT ETF. All right, so it's a REIT that gives more than the average. Okay, it's got a trailing yield of 6.9%, and analysts believe that the forward yield we are able to expect more, about 7.2%, which is on the high side. Okay, what I've done is I've got artificial intelligence to tell me what the price to funds from operations is. All right, it's able to establish that in AIMS APAC REIT's case, it's about 24.6, which is higher than other industrial REITs. All right, it's actually a little bit more expensive than the rest of the REITs if you're using a ratio that professional REIT analysts use. All right, REIT analysts do not use price to earnings ratio. They use price to fund from operations. Okay, so this will be the usual kind of format that I'll be coming up for all my shallow dives when it comes to real estate investment trust. So what kind of investment is this? It is a pure dividend yield play. All right. There might be some growth in the future, but the dividend is enough. Okay, and you have to take a little bit of risk, right? Because it's got more perpetual bonds than usual. It's something that you need to keep at the back of your head. Historical returns have been fantastic compared to the REIT ETF. It's been giving about 7.8%, even though the REIT ETF has been flat for the same period of time. It obviously comes with a higher risk because it's one counter against many. All right. And the maximum drawdown, which is during the era of the pandemic, is that, yeah, potentially you can lose 36.3%, right? If you time the markets wrongly. Okay. For real estate investment trusts, because the pandemic in 2020 has been quite bad to REITs, okay, it has sort of scarred the entire sector. And whenever I run an algorithm to calculate the maximum drawdown, it will always be a little bit high because of that one event. All right, so something that we need to take note of. But if you look at the annual standard deviation, it's okay. All right. Okay. Correlation against the REIT ETF is about 0.5. Okay, so it's a fairly meat and potatoes kind of REIT, okay, that you have in your portfolio. Uh, doesn't give a lot of drama, and in fact has been regularly giving money back to shareholders in the past. Okay, so the consensus view of the analyst is positive, with a price range of 148 to 155. Okay, so there is a very interesting upside if you were to invest in the counter. There are yield improvements and ongoing income enhancing initiatives. Okay, but you might want to look closer at that, all right, to get more information. And of course, what we like about the REIT is that it derives its income from diversified sources of industrial buildings in Singapore, and obviously a quarter of it from Australia. Okay, which obviously would be a much better selection than an industrial REIT that derives most of its income from overseas. Okay, and the artificial intelligence is also quite good. They say that the weakness come from the issue of perpetuities, right? Which is what I've been thinking about. Okay, and the interest rate coverage is important. The REIT is also relatively small, and apparently AI says that it has an in-house staff of about 37 people. Okay, that's not a bad thing, right? Smaller staff means less operational costs. Okay, some opportunities would come in the form of the ongoing solar panel rollout. Okay, and there are also asset revaluation opportunities, right? As interest rates go down, maybe industrial property prices will go up. Okay, and I foresee that, with the tariffs ongoing, the demand for logistical buildings in Singapore might actually go up. Okay, and the usual threats come from rising interest rates and a macroeconomic slowdown that can be the product of geopolitics. All right, so that's how you think about AIMS APAC REIT. What do you need to do before you make a decision? How do you proceed to do your due diligence? Okay, now apparently AIMS APAC REIT is known for its ESG practices. You want to familiarize yourself with what they're doing before making a firm decision. The work that they do with the solar panels, how consequential it is, how much would it reduce their operational cost by? All right, something that you want to think about. Okay, you have to really understand that this is one of the few REITs that raise capital using perpetuities. So the gearing really doesn't go up. So if you look at all the tables with gearing, AIMS APAC REIT looks like the good boy because their gearing is very low, right? Yeah, but you can't just look at the gearing, you also need to look at the interest coverage ratio. So you want to dig deeper into this perpetuities problem before you proceed, you buy it, because you might be buying a REIT that is secretly highly leveraged. Okay, yeah, even though I didn't have a problem with this for the past decade or so, you want to look at this before you proceed. Okay, the price of the REIT is also heavily impacted by interest rates. So with so many perpetuities being issued, when interest rates go up, well, majority of your rental payouts will be there to actually pay off the floating rate loans or floating rate perpetuities. All right, that's why you need to look at the perpetuities to see whether they are fixed rate or they are floating rate, right? So that you can make a decision. Okay, and of course, make sure that you're updated on the news on the industrial property in Singapore. Are we producing more industrial property and releasing it so that there's additional supply? All these will have an impact on this industrial REIT. And with that, that's all I have for this week's shallow dive. If you like my content, subscribe to my channel. If you want to listen to my life story, Google ERM intro, take the first link, and I will catch you on a 1.5 hour program where I'll talk a little bit about my life. All right, thank you very much, and I'll see you on the next video.